Let's go over to our man, Mr. Steve Rhodes, as we do each and every Monday at 20 past the hour. And then don't forget, folks, Steve has an outstanding show every trading day, 1 to 2 Eastern Standard Time. Also has a great newsletter, Mastering Probability. Now, it's very easy to get Mastering Probability, folks. Come over to our website at TFNN. You'll see on the right-hand side under featured content, you just hit that button. You can get 1 month for $149. You can get 6 months for $695, which is a savings of $199 at 22%. You can get it for a year for $1195, which is a savings of $593 or 33%. Steve Rhodes, what's going on?
Hey, it sounded to me like you're living the dream. Did I hear you say you're coming live from Islamorada?
You did.
I love
That's
it.
a fact. I know. I'm telling you.
Many an evening down there in the Chica Lodge. So I don't know how that dealt with the hurricanes and everything. But I mean, you and I were fortunate to live where we do. But even though we consider where we do live paradise, it's great to be able to get down there. What are you seeing? I mean, it must be. Is it crowded?
I haven't. We've been here since Saturday, and I haven't left the house since Saturday.
Okay, you're not worried about the traffic then. That's good.
No, it is pretty. It is wild. I know what you're saying. I plan on leaving the house just to see what is outside after the show. I know,
great.
man. I know.
That's great.
And the Islamorada, folks, it is. The Chica Lodge is insane. The Islamorada in general, if you like fishing or just in general, the Keys are amazing.
Absolutely.
No doubt.
Absolutely.
So, what do we got here?
Well, the last time we were together, a couple weeks ago, I had shared with you and with the listeners, the viewers out there, that at some point in time, when the Dow forms a significant top, that what we should anticipate is a retracement, a pullback that should last 2 to 4 years. And how I came up with the 2 to 4 year period is one of the tools that I can apply to my stock charts out here is count consecutive bars higher or lower. In this case here, I'm just focused on the bars lower. So it's got to be at least 2 bars. One bar doesn't do anything. And so if you have 2 consecutive bars out there, we've got a downtrend. So this takes us back into 1926. I'm not going to show the entire presentation that we did a couple of weeks ago. But what you notice here is you'll see increments of either 2 to 4. Sometimes you get to 3. Obviously, that's in between 2 and 4 out here. And those are the and that's typically where we see the market go ahead and form some type of bottom. So that's what I want folks to anticipate. Now, the weekly chart for the Dow, so that's what we were looking at there. This was an annual chart. So here was each of these bars here, folks, represents a year. Now we can do the same thing, and we move down into a weekly chart for the Dow. Now this shows that same 2 to 4 bar, but here we're only getting 2 to 3 bar. Just what I refer to as kind of a knee-jerk reaction low. And last Friday's low should lead to a bounce or a bottom for the next couple of weeks. Last Friday's low was bar number 3 of this pattern. So this chart here is taking us back to the March 2020 lows. So I'm anticipating that we've got a bottom, and it really ties into what you're communicating, which is to expect the market to move higher. Your Qs have taken back all the losses from Friday out there, so that's what I'm expecting. So another indication that we should have expected a bounce or a bottom came from the New York Stock Exchange. The center panel here is the advanced decline oscillator. Tom, what that is that's the difference between the 19 and 39 day, because we're looking at a daily chart here, exponential moving average of the advanced decline line. And when this gets down into the minus 150 level, that gives us an indication of an oversold market. Oftentimes we see a bottom inside the New York Stock Exchange form. And when you start to get down to the minus 250 level, which is what we did on Friday, we really get into the extreme oversold condition. So this condition has to be worked off, and it's another reason to have anticipated what we actually see taking place today in the market. Another indication was of a bounce, or at least a bottom, came from the NQ on Friday. And as strong as the market moved down, what the NQ did was it pretty much stopped at the bottom of its bullish structured daily profile. And folks, those are the blue horizontal. Wow. Yeah, exactly. It's so helpful because without the TAS market profiles, I have to use other tools to try to identify where the buyers and sellers are. But these market profiles, boy, they just identify it. They're usually not at swing points. It's somewhere in between. And then what's nice is that there's 3 different lines that are drawn, folks. Now, I'm only using one color here, which are blue. And the top line is where sellers are. The bottom line is where buyers are. And the center line is where both buyers and sellers believe there's fair value inside that range, the range being the bottom to the top. when the center of the profile is closer to the bottom, as it is here, that tells us that we've got a bunch of buyers lined up between 16,055 and 16,134. So it's not unusual to see. So support held on a daily basis. We're in the Dow, the YM, the ES, the Russell 2000. They're just in a world of hurt. But this market's not going to get any traction to the downside unless the NQ fails or the Qs fail, and they just haven't done that. So I'm on board with you, anticipating that the NQ is going to go make a run for the top of its profile, which is 16,009. Maybe it's going to go make a run for the all-time high. Maybe even it's going to take that out. But right now we know that support is held and resistance is 16,009. Another indication of a bounce today was that on Friday, the spot volatility index had a one-day rate of change of, I believe it was like 54% out there. This chart here, Tom, the top is the S&P 500, and the blue arrows represent when we have one-day rates of change above plus 10%. Doesn't matter whether it's 15%, 25%, 54%. We're just looking for any close that has a one-day rate of change above 10%. And what these blue arrows will show you is we typically see some type of bounce or bottom in the marketplace. Now I'm calling this a bottom simply because of what the NQ did in holding the daily profile, the getting to the extreme oversold condition inside the New York Stock Exchange, and then that 3-bar move inside of the Dow out here, which is why I'm calling this more of a bottom than a bounce, at least at this stage here. But Friday's damage, it was pretty significant enough to actually take the consolidation breakout pattern that you and I have been discussing with listeners out here, and it negated that price. And you just have to look at the bottom panel of the charts here, folks. Both the Dow and the Russell 2000 have come back into those white rectangles. It says they didn't have a consolidation breakout, and if anything, price could move down to the bottom. Could. And if the lows get taken out of Friday, then I'm wrong. And I mean to close below it, then I'm wrong about my analysis. Otherwise, I expect that we're going to see price make its way back to the highs, or at least to the top of their profiles. And the only way these markets are going to, when we spoke a couple of weeks ago, it looked like we were going to head higher into January. I'm not so sure just yet. Yes, I'm calling it a bottom, and we should get back up to resistance levels out there, and it could be the all-time highs. But the only way this market is going to move higher, and we're going to get that Santa Claus rally at last through the end of the year, is to take out those highs, because we have tops in each of them. The ES Mini's got a TD9 count top, a Rhodes Momentum Indicator top. The NQ's got a Rhodes Momentum Indicator top. The YM's got a TD9 count. The Russell 2000 got to sell the D point pattern. So there's a lot of topping patterns that are out there that the market is going to really have to work to and the last thing that I'll share with folks here is, if we're in this 2 to 4 year correction period, if we're just beginning, the one thing that will happen is we will see closes below the weekly TAS market profiles. Those have been all of the buy the D points. And just the ES Mini on the very right-hand side shows you those. And on ES Mini right now, that level to be watching is 45.04. So I believe we go higher for the next couple of weeks.
You know what's going to be cool, Steve, is to see what happens at these profiles on the NDX 100, right? I mean, because it didn't break, which is pretty amazing. So this is crucial, folks, because the bottom line is that it didn't break. If it breaks, then you know that, okay, man, it's trouble in paradise.
We got action to the downside, yeah.
I love it. Well, listen, man, you have a great one, safe one. Very easy to get. Thanks, Steve's Tom. Newsletter, folks. All you do is you hit market insight. Market
best probability.